So let's go to the Nigerian stock market, which was down some 2.2% last week as investors sold down on big names across the various segments. According to the Nigerian Exchange report, foreign investors have continued to exit the stock market as outflows on the floor of the NGX increased by 11.4% to 138.9 billion naira in the first 7 months of 2022. Let's raise the curtain on the new market week. Today, as we bring on the show, Ayodeji Ebo. Ayodeji is a licensed dealer and the managing director of Optimus by Afrinvest. Ayodeji, thank you very much for making the time this evening. We appreciate your time as always. Give me your outlook on the new market week for Nigeria.
Okay, thanks. Starting with the fixed income market, we saw the market for the T-bills market started like on a flattish note, despite the tight liquidity in the financial system, and also for bonds, though activities have not been significant in that space. So we didn't see much of activities today in the fixed income market. And for the equities market was also down today. We all know with the rise in interest rates, it has a negative impact on the equities market because the equities market will become less attractive based on, one, cost of funds would increase for companies that are trying to borrow, their finance costs will be up. And secondly, when you look at the market on a dividend yield perspective, it becomes a bit less attractive. So we'll begin to, that is also responsible for the sell-offs, continued sell-off that we see. And for the rest of the week, the fixed income market, we expect that there will be the primary market auction. We feel that the stop rate would also increase from the previous level. The 364-day closed at 7.45% at the last auction. We still feel that that would increase on the back of the increase in deposit rate across the bank, as well as even the savings account, interest on savings accounts. That will also impact on that. Also, we are expecting that there will be inflow in terms of liquidity within the system. There's almost maturity of about, I think, 45 billion, and also bond coupon payment of about 66 billion would be in the system. By and large, we expect that liquidity will still remain tight. And for equities, we still see that market will remain soft. Sell-offs will continue on the back of increase in fixed income rates.
Tell me a little bit about the various market auctions on tap this week and how this would impact the market liquidity. Last week, the central bank did a PMA. There was no sale at that auction.
Yes, for when you look at the liquidity in the system, CBN has still continued the CRR debit even as of Friday, and that's one of the main reasons why liquidity was also tight within the system. To also corroborate that, you would also discover that the special bills that CBN gives to the banks at 0.5% is currently trading at a discount of about 12%. So that really shows the magnitude of tight liquidity within the system. So we're not surprised that there's really no participation within that space. But we believe that for looking at it from the investor's perspective, the return on their deposit, return on savings account has gone up. So it's positive for them. And looking at the continued high inflation rate of about 19.68% in July, for them, they will be smiling to the bank, but negative for the banks.
Okay, so I know what's driving investor sentiment. Any macroeconomic data on your radar this week? What's your outlook? How are investors already trading their high inflation, high interest rate environment? When is the GDP coming through?
Okay, based on the National Bureau of Statistics calendar, we're expecting that the foreign and domestic debt for 2021 would be out, as well as the Q2 GDP numbers for 2022 would be out. And we expect that there will be much improvement in the data. GDP for Q1 was around 3.1%. We believe that it would be better than that, though there may be based impacts on it. There are some sectors that we feel would push the overall GDP upwards. We should watch out for the financial services sector. Also looking at even the building sector. There's been a lot of construction ongoing, which will also impact on that. We also expect that the trade sector, yes, the major setback for that sector may be reduction in FX liquidity. But by and large, we believe that it's going to be a better quarter compared to the Q1 data.
Great, thank you so much. Let's see how the rest of the week looks like. You're positive on the equities this week, somewhat?
No, I believe that we just select names. So the market presents good opportunities for long-term investors. When you look at some stocks on a dividend yield basis, it's almost getting to about 13 to 15%. So it's also good to lock in some funds. But what I would advise investors is you buy in tranches. We still expect a lot of volatilities even as we approach the election period.
Thank you so much for your time on the Market Week, for raising the curtain. Ayodeji Ebo, Managing Director and Chief Business Officer at Optimus by AfriInvest. Thank you. Have a great week ahead, and we appreciate that.